You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride-with-us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again. It is Wednesday, Education Wednesday, as it's known around these parts. Time for a little bit of options learning with your favorite options program known around the globe as OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from this network that continues to grow. Someone reminded me it was pretty much a year ago last week that we launched the Futures Rundown, which is wild. It's already been running for a year now. Crazy stuff. The network, of course, continuing to grow. Since that, adding the European Market Brief and, of course, everyone's new favorite, Thor, a.k.a. the Hot Options Report, coming at you every day after the closing bell. So a lot of great stuff. Yet another reason why, if you're not subscribed to the full network, what the heck? You are missing out on a boatload of great stuff. And if you head on over to the Pro, you get awesome exclusive stuff like my chat yesterday, and in fact, your Pro members' chats and questions with my buddy here, Dan's man crush out there, Mr. Scott Nations from Nations Indexes, holding court, answering questions about historical crashes on his books, and of course, a lot of vol and everything else. It was a good time. You can check that out. theoptionsinsider.com/pro is the place to go. And Dan, I know you're a fan. Maybe I'll see if I can score you an invite to the next one, sir. Mr. Dan Passarelli, the black-hatted one from Market Taker Mentoring. How you doing, sir?
Hey, Mark. Yeah, that would be really fun. I would love to do that.
By the way, I should point out for all you listeners who can't see this, which is all of you, maybe for some clips we'll put out just for fun, Dan is rocking an appropriate black hat. It's not quite the maybe maniacal black top hat you're imagining. It's more of a black beanie or perhaps a black baseball cap. I can't really tell, but either way, oh, it is. Okay. Either way, it fits the bill, listeners, as it's time for us to get exotic.
Let's get exotic.
All right, everybody, welcome to the world of exotic options once again. Dan, if we're going to keep doing this, we might need a drop called Let's Get Exotic. What do you think? Should we add that to the show? Should that become a regular part of the show going forward? What do you think?
Could be. Yeah. That'd be good. I'm trying to think of the imagery we would use.
Let's get exotic. But yeah, that could go a lot of different ways, I guess, if you think about it. But I digress. Coming into the last episode we did on exotic options, a lot of folks enjoyed it. A lot of folks had questions and engaged with it. So it seemed like a good area that was ripe for further mining. And Dan, one of the few areas of the option space that we have never talked about before on OBC, which in and of itself makes it somewhat rarefied territory. I mean, I love talking covered calls. We've done it a lot over the last decade plus, but it's always fun to mine some new territory as well. So last time we got exotic with barriers, effectively your knock-in, knock-out options. Dan, this week we're going to Asia. So maybe take off that black cap and put on maybe a more geographically appropriate outfit out there. Because when I say to you, Dan, Asian options, what springs to mind? What do you think of?
Boy, I think of people who have very, very specific uses for these options, especially institutional. And you know what else I think? I think exotic.
Ooh, some might say worthy of a drop called Let's Get Exotic. I don't know. I'm just putting that out there. Producers are going to get mad at me now. They have to create a new drop for the show. But you're right. It's kind of the polar opposite of our American options. Our America options, Dan. We want to exercise any darn time we want. That's our God-given right as Americans. We want to exercise them options. These exotic options, not so much, listeners. And you're gonna see. Let's get into the world of Asian options now. What are we talking about? In the world of, obviously options aren't boring, they're not vanilla, but for this conversation, we'll call them plain vanilla options, shall we? A typical option, you know it, you have pick your strike. You have to be, if you're buying, you have to be past the strike by the time it expires, all that kind of fun. You can do some stuff in between if you've been listening to this show for a long time, hedging and selling and all kinds of stuff. There's spreads, all kinds of fun things you could do with plain vanilla options. Asian options, we're getting a little bit different though. We're not talking about just waiting until an expiration price and then seeing how your option performs. It's actually going to be based off two different things. You're kind of wagering on or hedging on an average price this time. And it could come in two flavors. It could come as effectively an average strike. So you're getting an option where the strike is the average of the underlying price over some period. So it's not a fixed strike. You're not going out and buying, let's say, 100 strike call. You're buying whatever the average of the underlying over that period is. You can get those, though. There are fixed strike versions as well. So there's two flavors of the Asian options, your fixed strike and your floating strike. Dan, people might also ask, why the hell are they called Asian options? And as far as I can tell, and as far as most people can tell from digging, the name kind of first started being kicked around in the Asian commodity markets. Everyone knows, the 87 crash here and all the option stuff that was going on in Chicago. But there were some derivatives markets and derivatives trading floors in other parts of the world. New York, of course, had some. And Singapore had some as well. They had indexes and they had some oil contracts over there in Singapore. And it does seem like the term Asian option originated over there, applying specifically to Singaporean oil contracts. It since obviously has expanded it now. It just has to do with this specific type of option. But that said, Dan, Asian options in Singapore, that makes me think of that old movie with Ewan McGregor, Rogue Trader. Did you ever see that one?
Oh, God, man. Yes, but it has been a long, long time. I definitely don't remember anything about it, but I do remember that I saw it. That's all I got.
I remember Ewan McGregor wearing some, let's say, garish jackets in the trading pits over there in Singapore. But good stuff. An interesting movie, kind of its time, listeners. But a seminal moment, that whole Nick Leeson Rogue Trader, quote unquote, out there in Asia really did a lot of damage. It turned a lot of people's eyes open to how powerful these instruments are, including myself. It's one of the reasons I became intrigued by all things derivatives and got lured out of engineering at the time and into options. So I guess, Dan, he is to blame for you having to suffer with me every week, sir.
I knew I hated that guy.
All right, let's get into some Asian option examples, shall we? Let's go through the average price options first. Remember, we have a floating strike and a fixed strike. Let's go average strike version first, all right? So here, the strike of your option, as it implies, you don't pick it at the outset. It is the average price. It depends on, obviously, the difference between your expiration price and the average price. So your formula, if all you math junkies out there, is the max of 0. Or, of course, your final price minus your average price. That's for your average strike call. So let's say you have an Asian option and it went out with an expiration price, a final price of $110. Let's say over that same period, the average price of that underlying, it vacillated around 100. So then if you bought an Asian option over that period, let's say for sake of argument, it was 3 months. Then over that 3 months, you would get a payoff of $10 because it would give you a strike price, which was the average of the stock over that 3 months, which is 100. It went out at 110. So there you go. You get a nice $10 in your pocket. I don't know, Dan, it sounds pretty good. What do you think?
Yeah. It sounds good. I mean, you tell the story using American exercise style options, and that'll sound good too. But they have this really important difference, though. I mean, one of the things that comes to mind, and I guess this is why I said very specific use case and maybe a lot more institutional trading, is a lot of institutional traders, especially those who have like valuation models as opposed to technical analysis. They use some sort of fundamental data. The fund managers will be rated somewhat by what price they get relative to the VWAP, the value, the volume weighted average price. Clearly with the Asian options here, I think we're just talking average price, not necessarily volume weighted, but it can be a pretty good benefit to somebody who just wants to get rid of the noise and during this period wants to accumulate shares at basically just, hey, the average price between here and now. I'm not going to try and time the market. I can't do that. I don't know that I can buy the bottom. I might end up buying the top. I just want the average price over this period.
Indeed, sir. Let's do the average strike put example as well. It's the same thing, just to the downside, listener. So again, you're not picking your strike. Your payoff on these options really is going to be the maximum by either 0. Obviously, it can be worth nothing. So you could, quote unquote, buy one of these Asian options and it does expire worthless. Or the average price in the case of the put, it's flipped, obviously. It's going to be the average price of the stock minus the expiration or the final price. Let's say, again, same thing, you buy an Asian put and it goes out at $90. So that's the expiration price. But meanwhile, the stock average most of that time, same as the other one, $100. Again, same deal. You're going to get that $10 payoff. Remember, it's going to be your average price minus your final price, whichever is bigger, 0 or the average price minus the final price. So that's your average strike put. You can also pick your strike and then have it set off of an average price. And Dan's getting to volume weighted averages and things like that. There's going to be some of that here as well. There's obviously different types of averages, different types of means. There's arithmetic means, which is, of course, the standard one you're used to. You add them all up, you divide by the number. There's also geometric means, geometric averages. Those are less frequent, but they do occur sometimes in these Asian options. So if you're looking around at Asian options sometime, you say, wait a minute, these are geometric mean. They do exist out there as well. They have different use cases as well. Maybe we'll get to that in a little bit. But in your, let's say, your fixed strike and your average price call option. So this is a little bit different now. So your payoff on these, again, is going to be the maximum of either 0 or your average price over that period minus your strike. So let's say, once again, you pick your strike this time and you pick $100 again for your strike, because why not? A good, nice round number. Say it's a 3-month period you're buying this Asian call option on. Let's say over that period, you bought the par strike. The average stock price over those 3 months, $105. Dan, guess what your payout, what's your final value of that Asian call option is, sir? Take a wild guess.
Stock price or strike price minus stock price.
Yep, $5. A whopping juicy $5. Let's go the other way, listeners. Same thing for the put. You buy your strike, you pick your strike. Once again, you pick the par strike. And this time you're buying a put, so you're concerned about the downside. So you're going to flip that, obviously, that formula around. Your payoff, your value is going to be the maximum, either zero or your strike this time minus your average price. This time, the average price of the stock is $95. So same deal, strike minus the average price, again, $5. That put goes out worth $5. Again, you might see some Asian options that use a geometric mean. That's obviously a little bit different. You're going to take all the numbers, you're going to multiply them, you take the nth root. We won't go down. You can go look up your old high school and college math classes if you want to see the difference between those. But they have different use cases out there for the Asian options world. So Dan, folks might be saying, okay, these sound interesting, but you know, what the hell? Why do I need these options that key off of the average price of an underlying? It seems to take some of the fun out of it, right? If you're averaging out all of the spikes and all the aberrant, like what was that one example we had? The stock went out at 110, but it averaged at $100. So it must have had a big run up at the end, right? To get to that 110, even though it averaged at $100. So you're smoothing all of that out, listeners, which is kind of the point. Some big firms out there, they don't want to be exposed to all the shock and awe of various markets. They want to reduce the volatility. Maybe they're operating in, let's say, somewhat dubious market. They're concerned about manipulation at the end, or maybe there's going to be a big spike at the end. They don't like the way a contract is settled, or whatever the case may be. You could use it in those situations. So there's a variety of very specific scenarios. Commodities, let's say energy, oil and gas, for example, airlines, oil refineries. Obviously, in certain periods, oil, jet fuel, all these things can be extremely volatile. So you might want to buy an Asian call option rather than have it be pinned to the expiration on one particular day where things could be wild and impacted by, who knows, wild geopolitical events, something else going on, crude oil going negative, all kinds of weird things can happen in these markets. So instead, you buy an Asian call option. It allows you to maybe hedge without worrying about some crazy spike. Instead, you're getting the average price over this extended period. So you're kind of smoothing out the vol. Does that make sense, Dan?
Yeah. And I mean, I think it readily comes to mind the use case for Asian call options from my standpoint, and probably yours too, coming from the, the securities options space. For put Asian options, I mean, I think of a lot of those more as commodity space, along the lines of what you're talking about, just a little differently, where, you've got like the farmers who have to sell their corn or whatever, and the grain elevators who have to buy it. And, both of them want to get a decent price and not worry about the last day where the market closes on expiration day, which could be anywhere within a reasonable range. So, yeah, I mean, I think of it a lot more from that perspective, whereas from the stock market perspective, somebody's long stocks, whereas with a commodity like that, there are people who need to buy it and need to sell it. So, yeah, I mean, I don't know. I think Asian put options seem kind of weird in the equity space.
They definitely do in the equity space, which is why most of the use cases are in the quote unquote exotic markets, right, Dan? Like power, for example. Power is a wild market. All sorts of things can buffet power at any given time. Weird subsidies, grid outages, all kinds of things. So if you're a utility, maybe you don't want to be subject to the whims of whatever's going on with your grid with the hurricanes coming to town or something like that. So you can use these options, again, to give you an average price over, let's say, a particular season. So you can smooth out the seasonality in that case, which makes a lot of sense. If you're big in export-import, you have a lot of FX risk. this could work on that as well. Maybe you're worried about a particular event, a lot of FX risk going on in the world right now. Maybe you trade a lot in yen USD. You're worried about a particular event at the end of your period, or maybe that just lines up better with your cash flows 3 months. So instead you get the average over 3 months rather than just whatever one aberrant price it is on one particular day. So there are definitely use cases. There's some weird ones out there as well. Going back to equities, some firms, I'm not sure how prevalent this is anymore, but some firms used to use Asian style options for employee options. That way, in case there was a weird aberrant move in the stock, the employee couldn't just cash in at that moment. If you're in a meme stock, I guess that could be very important. GameStop should be putting out a lot of Asian employee stock options if they do such a thing. So you see some structured notes from banks that do these as well. They'll tie it to an equity index, the payoff, and let's say the index average over the past year rather than some period on expiration. Again, to smooth things out, to reduce volatility. It makes that note that the bank is issuing a lot less risky for them. And then some other really exotic use cases, Dan, like the freight world. I know for a while there was a lot of talk, Dan, about freight derivatives becoming the next big thing. We didn't really see it. There were actually some exchanges that sprung up around some listed freight contracts. We actually had them on the network years ago. Unfortunately, it never really came to pass. I think Nodal was one of the names. I think they're more into the power space now. But there still is some freight indices you can look at, listeners. And if you want to hedge your freight rates, let's say maybe there's a lot of seasonality in freight as well, you're worried about that, you can use an Asian option in that scenario as well. So you're talking super exotic then, because you're talking an exotic option on a extremely illiquid underlying. So a lot of caveats there, but that is another use case. Dan, have I sated your hunger? I know you came into me before the show and you said, Mark, can you really just run the gamut of information for me on Asian options today? Have I sated your hunger? Have I filled your request, sir?
Yeah. I mean, I think that a lot of people have heard of Asian options. I mean, as far as exotics go, that's one of the first ones that kind of just hits my prefrontal cortex. Like, okay, exotic options. Well, we got Asian options. So I think that just giving a good explanation, talking about how they work, the use cases, I think we provided some good service here, I think.
I can guarantee you there's not a lot of info floating around for folks who are intrigued by this on all things exotic, let alone Asian options. So we are definitely in rarefied territory. We might have to do a little more Asian, or I should say Asian. We have to do a little more exotic options mining in the future. Sounds like you folks are down for it, listeners. Hit us up if you are intrigued. Speaking of hitting us up, let's get to a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get out to the listeners. Speaking of the listeners, let's like our pro chat having fun. Mr. Frank in our pro chat says, this Asian option stuff is awesome. I can see a use case for these exotics. Yes, you're right. Unlike some others, there is a use case for these. If you want to smooth out your returns, you want to squeeze out a little bit of vol. And I could see an argument for why should I be beholden to whatever random price the underlying is at day X? Why should I be on the hook for that? Why shouldn't I get a more logical strike, or in this case, or, price, which is, of course, the average? I could see an argument for that out there. So I'm glad to see you folks are enjoying it. The Queen's enjoying it out there. All kinds of good stuff. Speaking of good stuff, Dan, before I get into some of the polls and stuff, I know you've been waiting with bated breath to get at the folks. What do you got for them with a little MTM action this week, sir?
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
Oh man, I'm looking at a number of things, but mostly, as I've talked about a couple of times on this show, I don't want to bore people if I talk about it every time, but I'm working on my third book, which is all on the wheel strategy, and I won't say a new spin on it, but kind of, just a lot of things that I learned about it over the 30 plus year period that I've been looking at covered calls and cash secured puts. So that is really where I'm spending a lot of my time and working on a lot of math. I've created a new indicator specifically for covered calls and cash secured puts, which seems kind of strange probably to a lot of people, but I did, and it's working great. So now, that's what's happening here, Mark.
Is your book called A New Spin on the Wheel? Is that what it's called, sir?
No, that's a very creative title, but no.
Is it called The Sexiest Wheel of All Time? Is that what it's called? And a big picture of you, thumbs up, with your black hat on the cover?
That is the subtitle, but no, not the title. Yeah.
I would pay for that edition of the book. That would be, I would put that right behind me in the studio, would have a position of prominence on the table there. But isn't it funny though, as we just talked about exotic options for a whole episode. And people assume, options have to be these weird, crazy, complicated things. Yet something as basic as the wheel, short put, and then call to get out of it if you get the stock. It's about as basic as it gets from a use case perspective. There are almost infinite flavors and permutations and you've been trading options for how many decades, and you're still discovering new nuances of the wheel. Isn't that wild, sir?
Yeah. But it's supposed to work that way. I like to say, as soon as somebody says, "Oh, yeah, I know everything there is to know about options. I don't need to learn anymore," you're done. You're toast. That's when you start losing money because it's just plain old hubris.
Are you saying I shouldn't have said that right before the show started? I know all there is to know about options. Now yes. The Greek gods will strike me down for my hubris. Let's see. Maybe they will.
Passive-aggressive comment to you, Mark.
Maybe that will come in the form of our listener here, who has a sweet handle. No chewing. I love it. No. He just scarfs his food down whole. He doesn't have time for chewing, Dan. He's busy. He's busy slinging Asian exotic options. He has no time to chew his food. Maybe he should follow up with a second name called ER Trip and Choking and Heimlich. No chewing. Now I want to know why is your handle No Chewing? Please write in with a follow-up. Tell us, why can you not be bothered to chew your food? Dan, this might be the show with the best handles that we have here in terms of listeners. They always crack me up. Maybe they're just taking advantage of that now, but I'm having a good time. Does he chew gum? I mean, does he not eat gum? Or what does he do? Does he swallow the gum? There are a legion of questions that I have, Dan, about the handle of No Chewing. But instead, I will answer his question. Nice guy that I am. No Chewing wants to know, where are we on options flow through the end of Q3? Is it still strong? Well, obviously Q3 not entirely in the books yet, but we do have numbers through the end of August. Just came out last week from our friends over there at OCC. Dan, I'll let you take a wild guess. Do you think August was a banger or a snooze fest? What do you think?
I am gonna go more toward. I mean, I don't. It wasn't a snooze fest, but I think it was lighter volume than the average for the year.
Well, you know what, Dan? It was a bit of a banger out there. I mean, now, the interesting thing is we are comparing it year over year to August of last year, which we all know what happened on August 5th of last year. We had the big meltdown, the yen carry trade. So last year was a banger in August. It hit over 1 billion contracts, 1.06 billion contracts. But it also shows you how much the options market has changed in just a year. We needed that sort of epic event, Dan, to reach the 1 billion contract threshold in a month. That was a nigh on unattainable goal just about a year ago. This August, we didn't see anything remotely like that. We had some action out there, obviously, but it is a period that is usually pretty seasonally quiet. Dog days of summer, and everyone, all the big banks, all the traders are in the south of France or the Hamptons. They're not at their desks. Markets are thin. And yet, Dan, still, with all that said, overall options volume up 18.3% year over year. So blowing away the 1 billion contract. That used to be the threshold for a banger month. It wasn't that long ago. 1 billion contracts was the most active month in history. Now we're at 1.26 billion contracts, Dan. things are getting wild. A full 200,000 more contracts than a year ago when we had that massive yen carry trade sell-off, whatever the hell you want to call it, a year ago. So again, that just shows you we needed that market moving event to drive that much flow a year ago, and now it's kind of just almost expected. In fact, Dan, if you don't hit 1 billion contracts now, it's like, pshaw, we want nothing to do with you, sir.
Jeez Louise, isn't that crazy, man?
It is absolutely wild. If you've been around options for any length, in this case, doesn't even have to be that long, just a year, listeners. Look at this chart year over year. Dan, equity options. Let's break it down a little bit. Equity options. Now, this is interesting to me because let's say a year and a half, 2 years ago, the equity options growth had kind of dried up. All of the entire growth of the options market was coming on the back of 0-day index options, right? In fact, I did a panel with JJ and a bunch of other folks at the Stack show almost 2 years ago, a year and a half ago. And that was the whole focus of the panels. Like, what happened to the retail folks? Are they gone? Because year over year, that year, the volume was pretty much down to flat. Not the case this year. August up 30%, Dan, to 725 million contracts. ETF options up 5.5%, so kind of the laggard of the bunch. Index options that were carrying the whole business for a while, still strong, but only, I put only in air quotes, up 6.9%. The weird thing, Dan, something I've been talking about with your buddy Dr. Vix on Vol Views on Friday, I did just talk about with your buddy Mr. Scott Nations yesterday on the Pro Q&A, is this one. VIX futures, completely in the toilet, off 34.5% year over year. There were nearly 7 million contracts a year ago. This year, about 4.5 million. So VIX futures, for a variety of reasons, sir, cannot catch a bid. What are your thoughts?
Yeah. I mean, it's funny how stuff just goes in and out of favor. And I do wonder how much that has to do with marketing efforts, because exchanges and the OIC, I mean, they do put a little effort behind, like, oh, hey, let's teach people about VIX options. And, you know, maybe in the CBOE's efforts to try and get people interested in newer things, they stop talking about VIX futures. I don't know. It's hard to say, man. I don't know.
Look at my network. They're not here talking VIX on our Vol show. They're talking more, the active retail stuff and all their systems and everything. So they have a lot of irons in the fire over there at CBO. I get it. But you're right. Maybe there is some of that. Also, something I've been speculating on for a while, especially for that intraday swing trader use case, a lot of that volume is getting cannibalized by the 0 DTE SPX right now. If you're doing that stuff, maybe you're going out there slinging butterflies in the S or something else like that instead. So I think some of that is going on as well. A little bit of cannibalization for whatever reason. And nobody wants to touch VIX futures anymore, which is kind of wild out there. So there we go. Oh, yeah, no chewing. No chewing. A, please chew your food. I'm concerned about you going forward. And then B, a long answer to your question. Yeah, August, still a banger, even though we didn't have that one seminal event like we did a year ago. Let's run through a few others, then we'll get out of here for this week. This is some payoff for some of our recent flash polls we did. In VIX land, we were asking not too long ago, the OCK 15 puts, they were going up 40,000 times for 19 cents. We said, hey, you like that? October, you're getting a little over a month, 15 strike. That's kind of been an interesting strike level. We kind of flirt with it in the cash, and then we rally through it again. The futures don't tend to get down there. So it's kind of a challenge. Do you like it or not? And our audience, Dan, exactly split 50-50 on whether they wanted to buy those puts or sell them. So I guess that literally means we have a market, sir.
Geez. Yeah. October. I don't know, man. Gosh, I mean, gun to my head, you might as well shoot me. That's a tough one.
That is a tough one. Our audience could have make up their mind as well. What if I said this, Dan? Instead, you want to take that same 19 cents. You want to buy a little bit more duration, but to the upside. What does 19 cents get you to the upside in VIX? How about the DS 110s? They also traded 125,000 times for 19 cents, Dan. So maybe that should be a good flash poll. Which would you rather have, the OCK 15 puts or the DS 110s for 19 cents, Dan?
Oh my gosh, man. Really? I mean, yeah, gut instinct. I got to sell those DS 110. Yeah, geez Louise.
Yeah, that was a wild one. We said do you want to buy them or sell them? Or we also put a third one in, which we said is the actual answer, WTF. And thankfully, our audience picked that. Nearly 50% went WTF. 28.6% want to buy them because I get it. we've talked before. Matt's been on this show before talking about his garbage VIX calls and how you don't need to get to 110 to have those do 2x, 3x, obviously. But still, it is a wild strike. Or sold to you, the Dan Camp, 23.8%. We also recently talked about on this show physically settled derivatives in the crypto space. Are they dead? Yes or no? Do you think there's only room for cash settled going forward? Or do you think you still see a need for physically delivered? Obviously, you have some underlying. You could sell covered calls against it, let it get called away. You could sell a put to get long the underlying. There's obviously use cases that are fun. Dan's wheeling all the time, so he's a fan of the physically settled. But Dan, our audience said they want cash settled only, 76.2%. Only 23.8% are here for the physically delivered contracts. Dan, what say you?
Really? Yeah. I'm surprised it's that much, to tell you the truth.
Really? You thought it was going to be a wipeout?
Yeah.
All right, that is going to do it for us here on the old OBC for this week. But you know what? Don't fret if you're hanging out in the pro. Then I'll be back instantaneously in your ear holes. No rest for the wicked. No waiting for you. Talking all things futures on effectively the 1-year anniversary episode of the Futures Rundown. So we'll get to all that fun in a little bit. And then, of course, I'll be back after the closing bell to talk Thor, a.k.a. the Hot Options Report. Where will the mighty son of Odin swing his hammer today? Let's find out after the bell. Another reason why you should be subscribed to the full network. And Dan, if folks want to check out all your MTM goodness, where should they go? What should they do?
Sure. Make your way on over to markettaker.com, 2 T's in a row. And we're actually accepting one-on-one coaching students at the moment, which we don't always do, but we are now. So if that is something that you're interested in, we'd love to talk with you about it. No pressure. We'll have our newest member of our Trader Success team, Darren, give you a ring and see if it's a good fit.
All right, check them out over there at markettaker.com. Don't forget the second T for Theta. And while you're checking folks out, make sure you check out our friends over there at Tasty Trade, tastytrade.com. You know where to find them by now. Maybe you go /podcast. Check out all the cool stuff they got cooking for all of you podcast listeners out there, including all of you OBC fans. That's it for us on the old OBC for this week. Back again in a few minutes for the Futures Rundown. And then later on today for the Hot Options Report. Then, of course, back with our usual array of content. I'll be back with the Flow Master. He was picking a bit of a Vol Deathmatch fight with our buddy Mr. Scott Nations on the Pro Q&A yesterday. So that might be our next Vol Deathmatch. Flow Master versus Scott Nation. Should be a fun one. So maybe look forward to that. Then after that, Twifo. Then, of course, Friday Vol Views. Then we're back again for our pro friends. The optionsinsider.com/pro is the place to get all of that fun. Then we're back again next week, all the way through to next Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.